31st August 2017 information. You can see the highlighted information, which is for rent paid. So you're supposed to prepare a rent expense account. As you can see here, you had made an advance payment worth of 200. So for an expense, when there is an advance payment, here the year starts on 1st of September 16, and you consider it here as prepaid balance brought down. That is worth 200. And then at the end of the financial year, there's 115 arrears. Leave enough space, nearly 4 or 5 lines, and whatever comes in arrears for expense, you debit it and then you credit it. So where would you debit? Just above the balancing, 31st 8/17 as accrued balance carried down 150, and then 1/9/17 as accrued balance brought down 150. Now there are two payments you have made. One is on 1st September 130, another one is on 1st Jan 2017 of 60. So basically when you make a payment, you credit the cash book, but here in the rent expense account you debit. And as per the question, all payments are made by check. So 1/9/16, a payment worth of 130, and on 1st Jan 2017, another payment worth of 60. Now you can see that the debit side is greater. You add up 200, 130, 60 and 150, which gives you 540. Bring it here. And this 540, which you take it above, goes to the income statement under the category of expenses as at 31st 8/17. Now we are done with the expenses account. Now let's prepare the income account, which is commission received. 100 in arrears at the beginning of the year. So go to your commissions received account. So you have the debit side and the credit side. In arrears of an income means it's an asset for you. Therefore you enter it on the debit side as accrued arrears, or accrued means it's same as balance brought down worth of 100. Followed by that, at the end of the year, there is 200 in advance. That means you have received the income in advance. So if you're supposed to pay it back, you're liable. Therefore you debit it and then credit it. So above the total, leave enough lines, 3 to 4 lines. So 31st 8/17, prepaid balance carried down worth 20, and then 1/9/17, prepaid balance brought down worth 20 and 20. You had received payments on 25th worth of 50 and on the March 1st worth of 120. So here you receive, so cash or bank you debit it. Therefore in the commission received account you credit it. One payment that you received is on 25th of December 16, and then another one is on 1st of March 17. Both the payments that you had received is in form of check, 150 and then 120. Now you can observe that the credit side is greater. 50 plus 120 gives a total of 170. Bring it over here. Now from 170 you take away 20 and you take away 100, which gives you an answer of 50, which goes to income statement under other income as at 31st August 2017.